Okay, everybody, it's me, Gregory Mannarino. It is Wednesday, August 24th, 2022. I tell you, just when you think you've heard it all, you've heard me say that, right? It gets even worse. Let's start off with this here. So we got a warning today, just this morning, from Bank of America. Now, this is what Bank of America is saying. Here we go. U.S. consumers are falling behind. Hold that thought. I want to tell you something later. And the consumer is struggling. Well, this came out on Bloomberg this morning. I'm watching Bloomberg. And then one of the commentators, Jack Keane, his counter argument, this is what Bank of America is saying. The consumer is struggling. The consumer is weak. Okay, so Jack Keane comes out and says, well, hold on a minute here. How can that be with the United States unemployment rate so freaking low? He didn't use the word freaking. Look, obviously, he's a paid shill here, all right? The numbers are fake. There's no way on this earth, off this earth, or anywhere else that any of the government numbers are real. They're all propaganda. They're all designed to twist people's minds into some distorted reality to not believe what they're actually seeing. What do? What does the propaganda ministry always do? Not only do they try to distract you, okay, look here, don't look here, but they're consistently pushing lie after lie after lie, reading scripts, trying to convince people that what they're seeing is not real. But that's the truth. I hated that. I hated seeing that. So we got a bit of truth here from Bank of America here. Consumer is weak, consumer is falling behind. Now let's play off of that just a little bit here. We also found this out. I don't think this is going to be a surprise to you. 1 in 6 American households can't afford their energy bills and have fallen behind. I mean, this goes right into the warning from Bank of America that the consumer is weak and the consumer is struggling. They're falling behind. But not according to Jack Keane. Oh, if the unemployment rate is so low, how can this possibly be? Make that up. Make it up with all the crap that's going on here, people. And we also got this durable goods order that came in missing the mark because the economists, the rocket scientist economists, they're never, ever correct. They drank the Kool-Aid, people. They believe, I guess, what they're being fist-fed, or they're trying to make you believe that things were better than they actually are. Oh, and by the way, I don't know if you care or not, but the Biden-Stein administration is sending billions of more dollars and weaponry over to Ukraine here. No oversight, nothing, not asking the American people if they want to support another war. You have no choice anyway. I think you already know that. Anyway, let's go look over at this freak show market. It's not looking good. The 10-year yield is 3.08. People, I want you to understand something here. And I've said this before, I'm going to repeat it because a lot of people keep writing to me. It's not really so much the number. First of all, when you're looking at the 10-year yield, you have to take in so many other dynamics that are in play in the current environment. Now that number, the 10-year yield number, is dependent on a lot of things. And we can obviously learn a lot from what's happening in the market by watching the 10-year yield, following action in the debt market itself as a whole. We are seeing global yields continue to rise. Not a good sign in this environment, especially at this pace. So it's not so much the number, it's how we're getting there, how quickly we are getting there. In a stable environment, the market would be able to tolerate a higher 10-year yield. But what we have here is a grossly inverted yield curve, an economy in free fall. Okay, it can't handle. The market already realizes that the debt market is unstable. You realize that by witnessing what global bond yields are doing. And I already said, if central banks don't take immediate action to fix this, it's over. The stock market is going to melt down worse than anyone can possibly imagine. Again, because why? All this entire freak show from stem to stern is dependent on action here in the debt market. Why do you think, just ponder what I'm about to tell you. Why do you think central banks have chosen to rig the largest part of the market, that is the debt market as a whole, because that's what they do, okay? Central banks do one thing, they manipulate debt. They issue debt in the form of their product, which is fiat currency. You understand? You don't even own these things. These are unbacked liabilities being dispersed via bankrupt governments around the world at the behest of central banks. And these supposed governments of the world, central banks are the government, are using every excuse imaginable, even a war, to continue to pull cash from the future, which we don't have. Ask President Biden where he's getting the billions of dollars in weaponry that he's sending to Ukraine. We don't have it, okay? It has to be borrowed from the Federal Reserve. In other words, you're paying for it. You understand? And you have no say-so. How do you feel? Do you feel like you're in the land of the free, home of the brave? Really? Do you really feel like that? I don't think so. People are being wiped out by design. They're being destroyed by design, all to fulfill the end game of central banks, who are hell-bent on not only becoming the lender and buyer of last resort, but implementing a final solution. And their final solution is multiple-fold. I believe a drastic reduction in the global population is in the cards here. Look up my article again, Global Debt and the Human Bubble. It's all about control here. We've borrowed from the future to create an environment that is not real. Okay, like I said, global debt and the global population have risen in tandem. When the debt market collapses, what's going to happen to the population? You're going to see a massive loss of life, massive loss of life. And the outcry in the streets is going to be just beyond anyone's wildest imaginations here. But that's the mechanism here, all right? Understanding what's in play, central banks fulfilling their end game, their final solution here to rule the world, to be the ruling body of the world, which they already are. Everything else is just a freak show. It's theater, everything. Freak show presidents and everything else. It's astonishing to see this unfolding, but that's exactly what's going on. So going back to the market here with this 10-year yield, 3.08, in this environment, okay, it's not a good thing. Let's just say in a few months from now, things stabilize, hypothetically, things start to get more normal, which they're not going to, and we watch that 10-year yield climbing at a controlled pace here. People are out there spending, they're not struggling. Then, of course, a higher 10-year yield would be okay, but not in this environment. The 3.08 on the back of global bond yield surging is a big tell that the debt market is unstable. And that is a very frightening prospect, because if we have instability here in the debt market, I think it's clear, in my opinion, and I'd love to hear from you, when we get that implosion there, you're going to see rates spike in an uncontrolled fashion. You're going to see the stock market bleed off like you have no idea. Everyone running for the door at the same time. And every subsequent bubble, and there are inverse bubbles too, I'm referring to precious metals here, are going to normalize very, very rapidly. And you think things are bad now with the economy? You haven't seen anything yet. I mean, we're not even close to the opening act yet. And people are struggling, people are suffering according to Bank of America, but not Jack Keane. No, the unemployment rate is so low. How could it possibly be? Duh! Really, Jack? Honestly, you buy these numbers, or you're just feeding people bullshit? That's all they do, these propaganda ministries, and it makes me so angry. Let's move forward here. Dollar this morning slightly stronger. Gold and silver under some pressure. Bitcoin still above 21,000. Crude oil catching a bid around $95. Overall, today, the market setup based off of the 10-year yield is not good. But let's see what happens. Are they going to push that rate down? Yesterday, did you watch what happened? At one point yesterday, the 10-year yield was coming down. The market started to rebound a little bit, the stock market. And then we got that reverse effect here. I'm telling you what this is. Instability in the debt market. Does it mean that we're at that implosion moment? I still say no. I know I sound like a freaking permabull or something, but I believe that the Fed and other central banks are going to get in here. But I could be wrong. I'm just telling you what I think. okay? Right or wrong, this is what I believe. I think central banks are going to get in here and start buying. The proof is going to be in keeping our eyes on the 10-year yield and keeping our eyes on the MMRI, Mannarino Market Risk Indicator. Again, link in the description of this video. You should look at that every day. Even if you don't want to follow the 10-year yield or you don't understand it, that's fine. The MMRI is color-coded. It tells you what range we are in. And right now, we're orange. This is a high-risk environment. And I think it's reflecting the instability in the debt market. I really, really do. All right, look, people, with that said, I'm going to let you all go. Please ponder the things I've spoken about here. Consider them. Comment. Let me know what you think. And just one more thing. YouTube is holding back comments, a lot of comments, and sometimes they're not showing up for even 2 or 3 freaking days. That's just the way it is. I apologize for that. It has nothing to do with me. A lot of you are writing to me, hey, Greg, I wrote a comment. It's not showing up. Oh, it showed up 3 days later. It's not me. They screen these things. I don't know why it happens, but that's just the truth. All right, look, I'm out of here. Love you a lot. I will see you later in the day, and that's it.